We are rolling right along into number 7. Hang in there. We're almost there. This anomaly or challenge to market efficiency is called the weekend effect. And then there's a close similarity, what we call the Monday effect. So there's something going on here on the days of the week. What we found is that Fridays have significantly higher returns than the other days of the week. Fridays post higher stock returns than other days. And then furthermore, so on Friday, things go up. And then on Mondays, post lower stock returns than others. What's going on here? So let's go back. What would efficient market hypothesis say about days of the week? If everything's perfectly priced, we don't care what day of the week is. And yes, maybe some weeks there are different informational changes that will cause some stocks to go up and the markets to go up and down. But on average, if we go back a long period of time, Monday, Tuesday, Wednesday, Thursday, Friday should all look the same on this random walk. Doesn't matter what day it is. But what we find here is Fridays post higher stock returns than others. And then on Monday, we have negative returns and significantly more than any other day of the week. And so I'm looking at this going, all right, how do I play this here? So I guess I could either buy first thing on Friday and sell it at the end of the day, or I can wait until the end of the day on Monday when it's hit its low and then hang on to it through the end of the week and let it go up. So if that's what we believe, we can manipulate the weekend effect. One caveat around this is on Mondays is that we start to see if on Friday we have positive returns, then our Monday will have a tendency of not being as bad. It tends to also be positive if we end on a high note on Friday. If we end on a high note or a low note on Friday, so negative Friday return usually means an even worse Monday return. Negative Friday is even worse Monday. And the original finding on this saw that the returns on Monday were 3-1 in its severity on how bad these negative returns were. And so we can think there's some things that are going on that are market based that can be explained through the efficient market hypothesis. So perhaps on Monday, there are some stocks that go ex dividend dates. And so if companies have paid out their dividends, everything is revalued at that lower price under their new valuation. So that could lead to some lower rates. But then there's some other behavioral issues that can possibly explain this as well. And so if we have company information releases, information release, and you're running a company and you've got some bad news to share, when do you share that bad news to your investors? Most companies release that after the markets close on Friday. So after 4 p.m. on Friday. So then investors can get the information, try to calm themselves down, because what we just talked about was this overreaction to bad news. And especially if you have abnormally bad news, let's give them the weekend to cool off. But even then, after the cool off period, guess who's hitting the sell button first thing on Monday morning? It's the investors that have these info releases over the weekend. So information released, we could have some trader behavior. So think about driving to work on a Monday morning or a Monday afternoon and compare that to driving home on a Friday afternoon. And I've noticed this as well. It's possibly people want to get uh, to home for the weekend earlier, or they're tired and they're making bad decisions. But there's something about the end of the week that makes us more risk taking. And so the question is, and we haven't fully answered that, is are we more cautious fresh in the morning on a Monday than we are on a Friday when we're happy for the weekend and we're going to be a little more risky in our behavior. So there's some trader behavior that we can think about. And then there's also institutional traders. These are, you think, portfolio managers, institutional traders, and perhaps a theory behind this is that they have time to reevaluate their portfolios and to reflect on it, and then think about their next move, which tends to be more on a sell side as they rebalance their portfolios. These are all just theories, but some of the reasons why we might see really good days on Friday and bad days on Monday. Anyway, that is the weekend effect. Also, the Monday effect when things go negative, there's that correlation as well. Hope to see you on the next one. We're almost there, guys. 3 more to go. See you then.